Have you had trouble closing on your house or thinking about closing during this government shutdown because of flood insurance?
Well, the good news is the private flood market is still open, and the National Flood Insurance Program policies will be opening back up soon. So there are options.
You got to tune into this episode of Really Mary and find out more.
Really, Mary?
Welcome back to Really Mary. Today I'm excited to bring on my friend and partner in crime here with insurance, and that's Rich Costante from Responsive Insurance. Hello, Rick.
Hi, Mary. How are you? Glad to be here.
I'm glad you are here because let's just get this out on the table. Hurricane-free that we just went through the last 6 months, right?
Yes, which is amazing. We got 2 weeks left, but I think we'll be okay. I think we'll get through the end of the month here. But it's great. Whew. I mean, being hurricane-free, everything that the legislation has done has helped, and now being hurricane-free, I really think that's going to help us for the next 6 months, really see rates drop and some new carriers come in and help the market.
I love that. The reason why I invited you in before all of this, because we were in the middle of hurricane season, was because you've got some new products and some new carriers. And so if I'm buying a home, or actually if I have a home and I need to shop insurance, it is a great time to do it right now. So you've got some products that you were talking about, the Flex Homeowners policy. Talk about that.
Yeah, so the Flex policy is a really nice policy. It's Orion 180 is the carrier behind it, and they offer a flexible homeowners policy where the buyer, the consumer, gets to choose what perils they want to be insured for. Obviously, if they have a lender, they have to have windstorm, they have to have hurricane, but there's other perils that you can choose to take or not, hail, water, things like that. The other nice thing about this is it allows you to add a co-insurance to it.
Like a reinsurance.
Kind of like a reinsurance. They set it up more like everyone's, co-insurance with health insurance. So you have your deductible. Once your deductible is met, then the co-insurance would kick in for anything above the deductible that you would have to pay. So if you have a $10,000 or $20,000 co-insurance,
right,
that's more out of pocket that you would have to come, to make the repairs. However, your premium is much lower because you're taking that risk with the insurance carrier. So
that's awesome.
It's a nice package. I mean, we've probably put 10 on the books in the last 6 months, which is really good for a brand new product, and it's exciting.
I love that. Now, let's just go back and make sure I understand that. I don't have a mortgage, and when I buy homeowners policy, that includes wind, right?
Correct.
So in that wind, I get wind, hurricane, and hail, or not hail?
Correct. So if you purchase windstorm protection, generally speaking, it's going to include hurricane, windstorm, and hail damage.
Okay.
On the traditional homeowners policy in Florida, the traditional HO3, or even the landlord policy is a traditional DP3, if you exclude windstorm, you're going to exclude windstorm, hail, and hurricane damage. So
you don't get to pick.
You can't pick and choose.
So
with this flex policy, you can choose to not be covered for hurricane, but still have windstorm and hail.
Yeah.
Or don't take hail, but still have windstorm and hurricane.
Okay.
So you can kind of mix and match, kind of pick your poison type thing.
I love that. And the benefit of that is reduced costs, right?
Correct. The lower, the less number of perils you're insured for, the lower your premium is. Yes.
That's awesome. Now, you have another one also with just wind only. So you have some new carriers that have come to town,
Correct.
right?
So what we have seen recently is a lot of these homeowner premiums are sky high. Mm-hmm. And that generally is due to the hurricane risk that we have here in Florida, especially being coastal like we are in Southwest Florida here. A lot of people choose to, even with a mortgage, they want to try to get the best rate they can.
Sure.
It's always, in my opinion, best to have one policy that covers everything, but in some cases you have to go out and get a wind-only policy. So especially on Marco Island, a lot of the older homes, and I use that with very cautious because I don't think homes are
I think it's a vintage home. A 1969 home is vintage.
Correct, a vintage home. You would have one carrier that does your homeowners.
Okay.
And then you take another carrier that does your windstorm.
Yeah.
And then if you have a mortgage on Marco or coastal, you probably have to have flood as well, which is separate. So the problem was prior to about 8 months ago, the only wind-only option we had was Citizens, and they capped out at $699,000 for coverage. So $1 million or $1.5 million dwelling home you had no option except to get a full homeowners policy. So this option, this carrier will write up to $5 million, no problem.
Wow.
They'll go up to $10 million, wind only, with underwriter approval. And it's, it's a good option. And I just spoke with the rep today, actually, and he said, listen, if the premium comes back and it's a little too high for the customer, ask them what they're looking for their price, and then they can work with their underwriters to try to make that fit. So they're really trying to get more business on there. And again, it's a single risk peril. It's only going to cover you for hurricane damage or windstorm damage if it hits a certain threshold.
Okay.
And there's 3 different parametrics that it measures.
Okay.
So you can do what's called a single phase, a double phase, or a triple phase for basically how the payout. And they're going to pay you out the highest level. So for instance, a category 3 storm that hits within 5 miles of your home is going to pay out 75% of your coverage.
Nice.
So if you have $1 million coverage, you'll get $750,000 just based on mileage. And there's wind speed and anemometer that they also can measure. So again, the more triggers you pick, the higher the premium, but the single trigger is still a pretty good one.
Well, if you've got a, let's just go for simple math, $5 million home, $10 million home, because that's probably simpler. None of the carriers are really going to give me back full that $10 million home. Let's assume it's on a $2 million or $3 million lot.
Correct.
So I've got $7 million in the house, and it's very hard to get that back on any insurance. So some of the things that you talked about with co-insurance and being able to do just wind only, that's fantastic. Now, the third thing of that we talked about is private flood market carriers, because flood is super expensive.
Traditionally, yes, absolutely it is.
Right. And again, the older the home, the lower the elevation, because the newer homes are up higher, you may get some flooding. So if you got a mortgage, you have to have flood. With a mortgage, can I get a private flood insurance?
So the private flood carriers, and there's a handful out there, they have to, per Freddie and Fannie guidelines, be as strong as the National Flood Insurance Program policy or stronger. Okay. And in most cases, they're much stronger. They usually will cover your pool for repair and refill. They'll usually give you temporary living expenses that the National Flood Insurance Program doesn't. They give you replacement costs on the building and the contents, where, again, depending on occupancy, the National Flood Insurance Program policies lack that replacement cost, potentially.
Well, and let's face it, National Flood Program only covers like $250,000.
Correct.
So top cabinets don't get replaced if the bottom cabinets get wet, and can they be matched?
Correct. Right. So, and that's the other thing, is the private flood market there's caps to it. Most of the carriers we write with will go up to 2.5. Some will go $5 million in coverage.
Okay. Yeah.
Have I sold a flood policy that has $2.5 million in coverage on it? No.
No.
And most people won't take that, but they might want $1 million.
Right.
Because now that's going to cover 4 or 5 inches of water in your house, which is much greater than the $250,000 that the NFIP caps at.
Right. And, a lot of people I hear, I self-insure, which is fine. You got to do the math. You can self-insure, but now you have programs that you can kind of pick and choose from.
Correct. Yes, absolutely. And there's many options out there, and it's many ways to get a premium down, especially like when it comes to flood. If you're only taking the flood policy to satisfy a lender requirement, going building only is all they're going to need. But I always tell people, flood is the most damaging cause in a hurricane. And there's plenty of people, when Ian went through that, wish they had flood coverage. I mean, it's sad that, you have to look back at a hurricane like that, and, but floods coming around, the rates are still higher, but there's options out there now to hedge that premium.
I love that. You've got to have a conversation with a great insurance agent like Rich to really understand what's best for you. We've talked about a few things, 3 things specifically. these might be good options for you, maybe not. But what I do know, it's probably time to shop your insurance because there's a lot of new carriers. There's a lot of things going on. And it's a great thing to do every year. So whenever that policy comes up, if it's now or at the beginning of the year, whenever you do that, it's the time. So until next time, I'm Mary Bartos with the Bartos Group of Premiere Plus.
Rich Costante with Responsive Insurance.
We look forward to seeing you here in Paradise, maybe getting a new insurance policy.